All right, so let's talk a little bit more detail about manufacturing overhead. So manufacturing overhead is a temporary account. What this means is at the end of the period, we're going to close this account out, right? So the instant you see temporary account, just know this account has to be closed. And we'll talk about that later when we talk about variances, right? Just like with the bad debt that we talked about, you're not always going to estimate this to be 100% correct. Sometimes you're going to be over or understated, and it still needs to be closed out. So it's a temporary account. We use it to reflect any indirect manufacturing costs during the period. So the biggest examples, and these are the two that we'll really use the most, is indirect materials and indirect labor. Okay, so anything that is an indirect cost to the manufacturing process gets put into this manufacturing overhead temporary account. Okay, and we will close it out at the end of the period. Also, any supplies that you use to maintain the equipment. So if you have to change the oil on a machine or whatever the case is, or you have to lubricate a machine every so often, that lubricant is going to be part of the supplies used to maintain the equipment. It's going to be part of your indirect cost. It adds value to the product. Any utility expenses used in manufacturing. So this would be like taking the square footage of a room and saying, okay, our utility bill was this, the square footage of the room is this, how much of that utilities was used for this room that's used for manufacturing. Well, that also gets added to this indirect manufacturing because it is a value add to the product. And then any property taxes that you pay on production facilities, those are going to be added as well. This is just like when we talked about adding property taxes to the value of an asset because you can't use that asset without having the taxes. Well, these property taxes, you can't use the production facilities without paying the taxes. That production facility is a value add, so we include the property taxes in our manufacturing overhead account. So the first account that we've got, or the first thing we need to talk about with the manufacturing overhead, is the actual manufacturing overhead. Okay, and this is the amount of overhead that you actually incur during the period. So this is what you actually paid out in manufacturing overhead. Okay, so just note that as we incur them, the manufacturing overhead account is increased. So as we use these things, we increase the related manufacturing overhead account. Okay, and then with the related cash or payable, we credit it for the incurred costs. So crediting cash would decrease it if we paid cash. Crediting the payable would increase it if we used an accounts payable with a vendor, if we bought on credit from a vendor. So let's take a look really quickly at a manufacturing overhead example. Okay, so let's assume that Apple incurs the following manufacturing overhead costs. In addition to the indirect materials and indirect labor during the month, they paid utilities of $5,600. They paid rent on the facilities of $12,000, depreciation on production equipment, insurance, and and then we had a total manufacturing overhead of $40,600. Okay, we would need to make, if we were Apple, the following journal entry to record this overhead. Okay, we're going to assume that insurance is prepaid and utilities and rent are paid with cash. Those are just assumptions that we're going to make. So manufacturing overhead, we can see here we are increasing this, right? We are debiting this. This is part of that raw and direct materials, that raw materials account, that first step in the process, right? So we're increasing this. And then we're going to decrease our cash. We're going to increase our accumulated depreciation, and we are going to decrease our prepaid insurance. So here you'll see debits and credits equal each other, and the important thing to take away from this is the fact that we are increasing this manufacturing overhead account, right? Because eventually we will have to decrease it, which will increase an expense, part of the cost of goods sold for those finished goods. Okay. The next thing is applied manufacturing overhead. Okay, so this is the amount of overhead that we allocate to the work in process during the period. So we've got an actual manufacturing overhead and we've got an applied manufacturing overhead. Okay, the reason we do this is because there is an assumption that these costs are value adds to the products that we're manufacturing. Okay, since production doesn't occur all at once, production occurs sporadically throughout the period, we have to allocate or apply manufacturing overhead as it happens. So what this really does is it allows us to assign estimated values of overhead to the WIP inventory, okay, because of the sporadic nature. So I think it'll make a little more sense. It'll be a little more clear if we just look and see this example here. It's going to tell us that Apple has an estimated $56,700 in manufacturing overhead that should be applied to their WIP inventory during the accounting period. We would record it by increasing the WIP inventory right here. So the work in process inventory, remember inventory, that's an asset, so we're debiting it here. That's going to increase the value of this work in process inventory. We are moving those tables that we've started building into this work in process inventory. And then we're going to decrease our manufacturing overhead. Okay, this is kind of that those indirect costs, those indirect expenses, right? Materials, labor, all that good stuff. So we're going to decrease that, and it's going to go into this work in process inventory account. Okay. Just another note, right? These costs are a value add, so we're recording it as an increase to that WIP asset. I keep repeating that because it is an important concept for you guys to take away from this. Okay, so I'm actually going to end the video here. In the next video, we'll start talking about what we call ABC, or activity-based costing, and that's where we're going to start seeing some of this applied manufacturing in the allocation process.